Tech giant HP reported its third quarter results after market close on Wednesday, missing Wall Street's revenue forecast and lowering its guidance slightly. The Street's James Rogers breaks down HP's numbers.
To be honest with you, the writing was on the wall for HP after we saw bad numbers from Dell earlier this week. Two key parts of the business really showed this. HP's personal systems group, which includes PCs, revenue was down 10% year over year. Now these are big problems for HP. On the PC side, it says that it's seeing weak demand and also a lot more competition. And I think this poses a big competitive challenge for HP moving forward. On the one hand, there are still calls for the company to sell off its PC business, and on the other hand, it wants to keep hold of PCs because it gives it a lot more exposure to the enterprise. I think that if we see more quarters like this one though, there's going to be even more calls for it to sell off the PC side of what it does.
With HP keen to boost its software business, a great deal of attention has been focused on the company's autonomy acquisition.
Well, software was something of a highlight for HP this quarter. The revenue was up 18% year over year, but I actually think that that could be quite misleading. Basically, there's a very positive year over year comparison thanks to HP's acquisition of Autonomy last year. Now, the analyst firm TBR reckons that because of this could be the last quarter when we actually see double-digit software growth at HP. And I think that moving forward, HP is going to have to really make a lot more of its software portfolio. It's going to have to do a lot more work around security, say. It's made some good acquisitions in this space, companies like ArcSight, and I know that Meg Whitman says that they're planning additions to the security portfolio during the fall, and these are going to be absolutely key. But again, though, I think software is going to need a lot more focus from HP.
So should investors see HP as a turnaround story?
Absolutely not. HP's CEO Meg Whitman said herself that these are still the early stages of HP's turnaround. It seemed last quarter like things were starting to move in the right direction, but after these third quarter results, I think we're seeing just the scale of the work that she has to do. I mean, some of the issues with HP are external, they're to do with the macroeconomy, but she admitted, she was quite straight up on the call, a lot of them are internal as well. It's got to do a lot better job with sales execution, and also I think that HP is a company which has got a lot of exposure into too many different spaces. Like she said herself, there's a lot of small areas, smaller projects that the company works on, that maybe it should look at divesting now. It needs to shift resources at the things that it does well. For me, I would stay away from HP for now though, because I think we're still away from the company's turnaround.
This market has fewer players.
We're coming into a Monday where
we're entering a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.